Firstly, it would be great to get a brief idea of the role Datasite is playing in the TMT space and perhaps a bit of background on yourself and what you're doing at the company.
Yeah, absolutely. So Datasite is a leading software provider in the M&A space and capital market space. We work with M&A practitioners, investment bankers, private equity funds, corp development teams, law firms on facilitating M&A transactions. So M&A is our bread and butter, if you will, but we touch the entire capital market space. So we'll facilitate deals on the IPO side of the house, follow-on deals, restructurings, and offers like that as well. And then particularly myself, I've been with the company for about 8 years at this point, always in the New York office. So thank you for joining us and making the trip up here. Our team specifically develops relationships and works with the investment banking client base, but Datasite as a whole, we have relationships with the corporate development side, corporate side of the house, law firms, private equity, but our team here is focused on investment banking. So I lead our sales efforts and go-to-market efforts for the team in New York.
As the demand for digital infrastructure continues to grow in the US, what trends are you seeing and where do you see the greatest opportunities for investment?
We are seeing, and I guess I'll back up a little bit, the unique vantage point that we have at Datasite is all of the deals that we're engaging on with our clients are seen at inception and built out at inception versus announcement or completion. So we kind of have a 6 to 9 month lead way on M&A deals and M&A transactions before they're actually announced. Year to date, we're seeing a ton of activity in the TMT space. So 12% uptick year over year within TMT activity, which is pretty robust. I think that reflects about the same in what you're seeing in TMT announcements. Digital infrastructure in particular is pretty unique. I think we'll get to it, I'm sure, over the course of the conversation, but AI is a massive initiative that's floating around and touching all sectors. But in order for AI to compute in the right way and work in the right way, you need the digital infrastructure built around that. So we're seeing a lot of investment in the digital infrastructure space, more so now on the capital side. So a lot of capital that's pouring into digital infrastructure, less so on the M&A front for that to spur into the AI side of things. But it's been very relevant for us.
And then going on to M&A activity as a whole in the US, how would you characterize the current state of M&A activity in the US? Are we seeing a kind of rebound, a slowdown, or a stability, maybe perhaps compared to previous years?
Yeah, I think we're definitely seeing a rebound. This year is certainly better than 2023, which candidly is not a great benchmark. It was one of the worst years in M&A. And we've been on an interesting roller coaster ride within M&A. 2021 was the best year that we've ever seen. 2022, a little bit lower than that. Then 23 dropped even further. So to say it's a better year is good, but I would take it with a grain of salt. We're probably in line, maybe a little bit lower with 5-year averages. Within that, I mentioned the tech sector is extremely hot for us. You're seeing a lot of consolidation within the energy, power, and utility space as well. Think that should continue as a lot of investment grows into renewable sources and alternative energy sources as well.
Great. Obviously, you kind of touched on tech there. My next question was going to be which sectors in the US are driving the most M&A activity right now? And are there kind of specific industries that are poised for consolidation or growth?
Yeah, so tech for sure, I think will remain paramount. The sheer amount of tech companies or companies that categorize themselves as technology companies will naturally see a lot of deal flow coming out of that space. So within the tech sector, our deal kickoffs are up 17%. You couple that with the tech sector already on the announced basis level is up 20% year to date. So with our view, the 17% kickoff along with 20% up year to date on technology, that should continue through the rest of this year and into the balance of next year. The consumer space is starting to pick up. I think that was a space that's been a little bit quiet over the last 18 months or so, but starting to see some traction. And then industrials as well. And within that, a lot of deals in the secondary automakers realm. And then point back to technology and AI, many auto companies are starting to embrace technology, embrace AI. You're seeing self-driving vehicles. So there's a lot of transactions that are happening within that space as well.
Absolutely. And how has the recent shift in interest rates and access to financing impacted the deal environment in the US?
I think it's been a net positive. Really early to tell because the meeting was about a week and a half ago at this point. But anytime you get a 50 basis point reduction in the interest rate environment, that's typically a net positive. So I think the private equity community has been relatively on the sidelines for the last 18 months. they leverage or lever down a lot of their deals with quite a bit of debt. Bringing down the cost of capital is certainly going to be accretive to deal flow going forward. So when you get the private equity funds stepping off the sideline and being a bit more active, that naturally just creates a lot more momentum in the M&A space. And then I think the line of sight, so the Fed not only cutting interest rates currently, but talking about their intentions through the balance of this year and into 2025 and 2026 gives people a bit more of a pleasing feeling, knowing that they can refinance their capital a little bit later down the road.
Have there been any noticeable shifts in deal strategies amongst US companies, such as kind of the focus on domestic targets versus international expansion, I guess due to the current economic climate?
I haven't seen any particular shifts in cross-border deals. I was looking at a report a little bit before this. I think US to Europe cross-border deals make up about 33% of those deals year to date, of cross-border deals year to date, which is about in line with the average, usually around 30 to 32%. So no particular uptick or trend in that space currently, but we'll see.
Yeah. And then I guess moving on to AI, kind of buzzword of the conference and everywhere recently. How is AI changing the way that M&A due diligence is conducted in the US? And are there specific advantages that AI offers given the kind of complexities of domestic transactions?
Yeah, I think if you look at Q1 earnings calls, 75% of the S&P 500 companies mentioned AI in their earnings calls, which is pretty paramount and drastic to previous years. So within M&A and particularly due diligence, to your point, speed to insight is incredibly important. Within our platform, we're seeing 50% more content uploaded into our virtual data rooms per deal, and that's on a year-over-year basis. So there's already a ton of content in those data rooms, and that's a lot to sift through at an individual level. So bringing in AI components to be more efficient is going to be extremely helpful for the due diligence process moving forward.
And I was going to say, what kind of challenges do US firms face in terms of adopting AI-driven due diligence tools? Are there any kind of regulatory challenges that they might be facing?
Yeah, I think on the regulatory side, I can't speak to that as much. What we see being a tech company and ensuring that our clients are leveraging the best technology, and not only within that technology, but the most efficient features and enhancements. Datasite has a slew of different AI capabilities that we've built out on a proprietary basis, which I think is super important as well. Confidentiality within the M&A space is paramount. So using various third parties when it comes to AI is a little bit sticky and can cause concern within the M&A space. I'd say the biggest barrier that we see, and we're having conversations with investment banks, private equity funds all the time, is pure inertia. So the M&A deal makers have been extremely successful over the years, over decades, doing deals the way that they have. So why adopt? Why change at all? So we're hurdling with that. We're grappling with that. But I think when people feel the technology, feel the power of AI, like you and I on a consumer basis, ChatGPT rolled out in November of 2022. It makes our lives a lot easier for a lot of reasons, whether that's searches or you want to go on vacation. Okay, I can build out an itinerary for you. We see AI kind of being the similar catalyst within the M&A space as well. But it's going to be breaking down the inertia that currently sits within the M&A ecosphere. And then on top of that, I think you've got a younger generation of M&A deal makers coming into the space, which should be helpful. They've grown up on technology with iPhones and tablets in their hands, not since day one, but for quite a while. So when we have those conversations with the junior banking teams or junior private equity folks versus the senior groups, it translates a bit easier. But really, it's just about getting the tools into the hands of all M&A practitioners. And once they feel it, I think they'll realize the effects that AI can have on M&A.
I guess as that adoption grows in due diligence processes, do you foresee any shifts in how regulators like the SEC approach oversight of M&A transactions in the US?
I don't have a view on that. I would imagine that over time, and as we understand AI more, what it's capable of, the efficiencies that it can bring to the DOJ, SEC will certainly step in with some guidelines and guardrails. So short answer is yes, I'm sure they will, but I don't have any context behind that.
Yeah, absolutely. And could you share a bit on how Datasite is using AI to streamline M&A processes for US clients? And are there any US specific features that have proven particularly useful for you guys?
We went on the AI journey quite a bit ago, probably about 5 or 6 years ago, building out the technology ourselves, knowing that, again, just given the sensitivity of these M&A deals and the content that sits within our platforms, that we wouldn't be able to outsource that into third-party AI. So we've got a bunch of different features that sit within our various platforms. We have 7 platforms now. I think as it pertains to due diligence, one of the biggest is smart categorization. So if you're dumping thousands of documents into a data room and then tasking somebody to go through each document and categorize where that sits, whether this is a financial statement, an HR document, an org chart, whatever it may be, AI now goes through and reads those documents, understands what they are, and then suggests where they should be placed, which saves an insurmountable amount of time. So that's one piece. I think redaction is pretty critical in M&A as well. There's a lot of PII out there, so social security numbers, credit cards, dates of birth, things of that nature that may not necessarily be critical to getting a deal over the line. And as we know, privacy laws are very important here in the US and globally as well. So we have an AI redaction tool that will go through, identify those pieces of data, and then redact them for you. Ultimately, down the line, if you wanted to release that information within a process, it's one click of a button, can redact it, can unredact it. But having the AI capability to go through and understand what these data sequences are, letters, words, numbers, and putting them together and redact them is pretty interesting at this point. On the deal inception side, I think that's probably what we're most excited about. Currently, you have private equity funds and corporations that are becoming more and more specialized and even hyper specialized. So instead of getting banker books in the hundreds over the course of a year and reading through every single one of them, they're able to go through and market map. These are the specific targets that we would be interested in X space and X geography. So we've built out both organically and inorganically deal sourcing tools that will help to market map, find buyers, find targets, find sellers within the M&A space as well. So I think we're just touching the surface on that piece, and I think that's going to be a big runway for us going forward.
Absolutely, sounds exciting. And I guess looking forward slightly, what do we anticipate for the next wave of deals in the US? And specifically, what sectors do you anticipate leading the next wave of M&A deals? I know we touched on the ones that are leading at the minute in terms of tech. Do you imagine that to continue?
I do. I think just given the sheer amount of technology companies that are out there, we're bound to see a continuation of tech deals moving forward. But that, coupled with the macro environment, interest rates coming down, inflation is becoming a bit more tame, which is a net positive for the M&A community and the M&A space. I think we're on the cusp of, and I'll knock on wood, but a good wave of M&A over the next couple of years. And to your point before, AI, we see a lot of tech companies that are going out to market, either buying and selling companies. And what you used to see is a tech company buying another tech company, or a technology-focused private equity fund buying a tech company. But now what you're seeing is that's becoming a bit more agnostic across sectors. Most companies need some type of technological enhancement or tech capability within their platform to survive in this world. So within the legacy spaces, call it energy, oil and gas, the automotive space, the industrials, manufacturing spaces, you're seeing a lot more cross-contamination where those types of players in those various sectors are going out and acquiring technology through M&A.
Yeah, I guess, are there any emerging technologies or trends in the US that you think will create new M&A opportunities? I mean, you've kind of already touched on that slightly, but I guess, yeah, advancement in AI, renewable energy infrastructure, or healthcare tech maybe?
I think it's all of those. You're seeing the efficiencies in healthcare tech. Obviously, during COVID, we weren't able to as freely go into hospitals, doctors' offices. So you had telehealth that became massive. That's similar within the education space. People couldn't go on campuses. So ed tech became a bit more paramount. So I think technology and AI wrapped around technology is just going to continue to be the theme. And then on the consolidation front, I would imagine that the energy space will continue to consolidate. We're seeing it within media as well. There are a ton of different streaming services, a ton of different networks out there. In order for them to survive and compete, a lot of them are going to have to team up, and we've seen some big announcements this year already. So would expect that trend to continue. And I think the last point on that is we've seen quite an uptick in the consumer space. So our deal kickoffs in the consumer space are up 35% year over year. And I think a lot of that is obviously due to consumer confidence and spending, but just the ease of which individuals can go out and buy. So like you and I now, instead of going to a store, can pick up our phone, can log on to a website and buy something with the click of a button. It's almost too easy. And then on top of that, you couple it with different financing alternatives like buy now, pay later, which allows people to buy whatever goods, products, assets that they want now and then pay it over time. So the consumer space, we're starting to see quite an uptick in M&A activity and would imagine that's going to continue.
How do you see the availability of private equity and venture capital evolving in the US, particularly in fueling new waves of M&A activity? Will tightening credit conditions influence deal making, do you think?
I think the private equity community, the venture capital community, they're a very creative group. So when your standard LBOs, fundraising, things like that become tough, what they've done a really good job of over the years is dipping into and creating secondary transactions. So continuation vehicles and things of that sort. We've seen a massive uptick over the years of M&A, if you will, within the secondary nature, but it's still relatively nascent. So I think that the complexities of liquidity needs for LPs, that's going to continue to be more complex. The private equity funds will continue to be smart and navigate that as they have. So I think it'll be interesting to see what happens in the secondary space within the private equity and venture capital community over time. Also within the VC side, they've had a down couple of years. So I think they're poised specifically with the advancements in AI and then specifically the digital infrastructure that's needed to build out these AI capabilities, whether that's data centers, cloud compute capabilities. I think the VC funds are starting to be extremely active in that space.
Absolutely.
What was the last part of that question? Sorry.
I was saying, will tightening credit conditions influence deal-making patterns?
Yeah, I think on the credit side of the house, similar to the secondary transaction piece where, okay, if I'm locked up in a private equity fund for X amount of years and can't get out, now we have these new alternatives and new ways of liquidity. Similar things happening on the credit side with the amount of credit funds that are popping up all over the space. So you've obviously have your main lenders in the banking community, but these credit funds are competing and quite well within the credit space as well, which is just making access to debt and financing, I don't want to say easier, but it's more accessible. And I think that's a net positive for M&A.
Absolutely. Well, it seems like an exciting year ahead. And thanks so much for joining me and sharing your insights. It's been great to have you.
Absolutely. Thank you.